This is Barry Zalma speaking for Claim School Incorporated with another true crime story of insurance fraud. This number 35 is entitled How Insurance Fraud Destroyed a Family. Bill and Libby were very successful insurance brokers. From their offices in Walnut Creek, California, the Bill and Libby Agency generated $100 million in premium volume for 14 different insurers with whom they held an agency appointment. They were one of the biggest retail insurance agencies in Northern California. Success brought the good life. They owned a 6,500 square foot mini mansion in the hills of Oakland. They built their house over a lot purchased from a victim of the great Oakland Hills firestorm. Bill and Libby furnished the house with antiques and antique replicas. On every wall, Libby hung her collection of ceramic plates and fine art prints. On every shelf sat Lladro sculptures, Hummel figurines, and limited edition sculptures and plates depicting English country scenes. Their daughter Sassy had a glass display case in her bedroom with a collection of more than 200 antique or collectible dolls. As a professional insurance agent and broker, Libby purchased a homeowner's policy from one of the companies Bill and Libby Insurance Agency represented. She added a personal articles floater listing more than 750 collectible items. In addition, she got from a surplus line broker a personal articles floater issued by London-based insurers through the Institute of London Underwriters on an additional 200 items of scheduled fine arts. Libby and Bill moved into their new home in 1995 after spending more than $1 million to build it. Their troubles commenced the first time it rained. Water seeped into the kitchen through the walls, fine linen wallpaper peeled, the oak parquet floor buckled. There was no damage to the roof. The reason the building leaked was a mystery. Bill and Libby called the contractor, who puttered, caulked, and declared the house watertight. It rained again, and the water flowed into the house again. After 6 rainstorms and 6 alleged repairs, Libby and Bill were at wit's end. They hired a lawyer, I.M. Shyster, to sue their contractor for defective construction. An engineering study told them that the contractor constructed the building without flashing at the windows in places where the roof joined the exterior walls. Each window would have to be removed and replaced. The roof needed to be completely removed and reinstalled from the sheathing up. The contractor, although insured, was without funds. His insurer was willing to defend him from any suit brought by Libby and Bill under a reservation of rights, but refused to pay any money toward a settlement. Libby and Bill had sued and had no choice but to continue the lawsuit to trial. They never made a claim to their insurer, Safe and Sane Insurance Company, a source of almost 20% of their agency's income. Bill and Libby had concerns that even if Safe and Sane Insurance paid the claim, they could suffer a considerable loss of business. In addition, they did not want a major client to know a builder had defrauded them. They made no claim and convinced themselves they did not make claim because the damages were not covered. In fact, no exclusion applied. Their insurer may have paid to repair the damaged property because, unlike Bill and Libby, who were great salespeople but were not insurance experts, their insurer would have done a thorough job of investigating the cause of the leaks and found that they were due to a peril not excluded by their policy. When the policy came up for renewal, they decided to replace the policy with an insurer they did not represent. They went to a local broker in Oakland who was flattered that Libby and Bill would consider his agency. He wrote a guaranteed replacement cost $1 million top-of-the-line homeowners policy with Secure and Stable Insurance Company. Secure and Stable copied the personal articles floater from the prior insurer and issued the policy. As a professional courtesy, the broker paid half his commission to Bill and Libby as he would to any broker who referred business to him. He had no problem placing the insurance with Secure and Stable. Bill and Libby represented they had no prior losses. The house was only 1 year old, and they, as insurance professionals, made an exceptionally favorable risk for the insurer. Secure and Stable's policy was in effect for 2 months when an accidental fire destroyed half the home and damaged or destroyed most of the contents. Secure and Stable sent their most experienced staff adjuster, H.E. Fair, to meet with Bill and Libby and take care of all the details of the reconstruction. With advance payments from the adjuster, Bill and Libby moved into a rental home only 2 miles from their office in Walnut Creek, almost as big as the home that had burned. Because it took some time to get the rental ready, Bill, Libby, and the kids spent 1 week in Libby's father's house in San Francisco. Libby presented a bill to the adjuster from her father for $9,500 for the temporary 1 week's lodging for Libby, Bill, and their 4 children. Secure and Stable paid the $9,500 immediately upon receiving the claim from Libby. Bill and Libby hired contractors and engineers and started reconstruction within a month. Secure and Stable made advance payments to the contractor who was rebuilding the house. It paid the rent on the substitute dwelling and made advance payments to Bill and Libby for their additional living expenses. Since groceries were more expensive in Walnut Creek, the dry cleaner was more expensive, they had to drive farther, and they even had to pay their maid extra because she had farther to travel. Secure and Stable sent monthly checks to cover the extra expenses. The most detailed and complex part of the claim was the contents and the scheduled items. Libby, a busy professional, took on herself the obligation of putting together the documentation necessary to prove the claim. She obtained purchase invoices, repair estimates, refinishing and restoration invoices and estimates. She put together 2 3-inch notebooks full of documentation and schedules of items destroyed in the fire, from items as inexpensive as a can of peas in the cupboard to as expensive as a $6,000 brass bed. The reconstruction of the house, however, was completed without the need to cure all the defects that were the subject of the lawsuit against the builder because they were destroyed in the fire, before Libby could finish preparation for a contents claim. On a monthly basis, as required by California's Fair Claim Settlement Practices regulations, Mr. Fair would write a nice letter to Libby asking for her assistance in putting together the contents claim. He kept reminding her that if she wished to collect for replacement cost on the contents, since he'd already paid actual cash value, the policy required that the contents be replaced within 12 months of the fire. Libby and Bill had moved back into the house, and the deadline was fast approaching. Secure and Stable, as an expression of its good faith, unilaterally extended the time to actually replace an additional 6 months. Libby procrastinated. She really did not want to buy all the things again. She was torn because she felt the actual cash value settlement payments she received from Secure and Stable were too low. Libby began to gather invoices to prove most of her items had appreciated rather than depreciated over time. Fair encouraged her to do so, since he wanted to pay her the amount owed under the policy. Because they were so busy in their practice, Bill and Libby were unable to complete the task of replacing the items on time. On the deadline, Libby had her administrative assistant package together all of the remaining documents. The documents included replacement cost invoices and other invoices showing that the actual cash value of her personal property was much greater than that agreed to by the company. Bill and Libby told the adjuster they would be satisfied with an annual cash value payment rather than replacement cost if he accepted their increased actual cash value claims. They settled the claim to the Institute of London Underwriters Insurers in the first week, since it was obvious to their insurer that the fire destroyed all the scheduled items. The policy issued by the Institute was a valued policy, and they simply paid Bill and Libby the limits of their policy. The adjuster, H.E. Fair, recognizing that he was dealing with an insurance professional, resolved all doubts in favor of Bill and Libby and provided less help than he would to lay people. He assumed Bill and Libby knew what they were doing. Before the deadline for collection of full replacement cost and or claim for additional actual cash value payments expired, Mr. Fair had already caused Secure and Stable to pay Bill and Libby more than $850,000 for their fire loss. Libby had already written 2 letters to his supervisor complimenting Secure and Stable on the professional way they handled the claim and thanking them for their courtesy in giving busy professionals additional time within which to prove the claim. The last-minute package confused Adjuster Fair. It contained documents that sought an additional $200,000 in the difference between the actual cash value payment and the full replacement cost. Fair believed he had paid top dollar on every item claimed by the insured. He took minimal or no depreciation on almost every item. Fair simply could not conceive how an additional $200,000 in loss could be justified. Only a week before receiving the package, the Special Investigation Unit Manager for Secure and Stable Insurance Company visited the branch in which H.E. Fair worked. Secure and Stable required every adjuster to attend a 3-hour training session on recognizing insurance fraud. The SIU manager emphasized that adjusters should verify every invoice presented to them by an insured, not just those that appeared suspicious. Fair had not taken the time to check the receipts he received from Bill and Libby. The fire was a catastrophe for them. They were insurance professionals. They convinced Fair that he could trust them. The idea that wealthy insurance professionals might attempt insurance fraud never crossed his mind. Although Fair had more than 20 years of experience as a field adjuster, it was not until the training session presented by the SIU manager that anyone had ever told him that insurance fraud was sometimes committed by the rich, famous, and otherwise honorable people. He started to check on the last package of receipts. He was sure it would be a waste of time, but H.E. Fair always followed instructions from corporate headquarters, even if he thought those instructions were a waste of time. One of the items presented to him was an invoice copy of a check for the purchase of 2 obsolete but working reel-to-reel tape recorders. He noticed the check was not canceled by the bank and that the copy he received did not have a code in the bottom right-hand portion of the check. He called the bank, and First Federal of Oakland advised that the check he was holding had never been negotiated. Fair became disturbed. His latent skills as an investigator were invigorated. He took from the package invoices from 10 different vendors in and about Oakland and the East Bay. He drove to each of the vendors to see if he could verify that the invoices he had received were as accurate as claimed. His first stop was at Old Country Antiques. He met with the owner and asked if she knew Bill and Libby. "Of course, they're very good customers of our store." "What kind of things do they buy?" "Almost anything in our stock, although Libby seems to prefer collector plates and small sculptures." "How often are they here shopping?" "Sometimes twice and 3 times a month. I would say that Libby probably spends as much as $30,000 every year in our store. She doesn't quibble about prices. She pays the price marked on the item either in cash or by check." "Well, I'm pleased to hear that," the investigator replied. "I'm sure you can help me verify some of the items Libby has told us she purchased from you and lost in the fire." "Well," the storekeeper responded, "I'm always willing to help a good customer." The investigator had 25 invoices from the store presented to him by Libby. He and the owner of the store sat down and went through the invoices item by item. The owner was able to pull her copy of the first 2 invoices and verify the purchase. The third seemed cause for serious concern. She began to squirm in her chair. She shook her head and made quiet little clucking noises with her tongue. "Is there something wrong, ma'am?" Fair asked. "Did Libby give this to you as a receipt from our store?" "Yes, ma'am." "I don't understand it." "What don't you understand?" he asked. "Well, this is a receipt from our store. In fact, that's my handwriting, where my name Sandy is written there as the salesperson, but this isn't one of our receipts." "What makes you say that?" Fair asked. "Look here in the bottom left-hand corner. That's where our invoice number is printed on all our invoices. There's no invoice number. Look here in the sales tax line. It's charging 9.75 sales tax. That's the sales tax in Marin County. We're in Contra Costa County, and the sales tax is less. There's no way for me to look this up without an invoice number. Why would she make a false invoice for only $250? "I don't know, Sandy," Fair replied. "Why don't you look at the other invoices and see if there is more than one that didn't come from your store?" "Oh my God," Sandy responded. "Of the 25 invoices, 23 were not prepared by Sandy's store. The total amount of each invoice was fairly small, but when the amounts were added up, Sandy and the investigator held almost $30,000 in false invoices." "Why would they do such a thing?" Sandy asked. "These people make a very good living. They live in an enormous house and have cash to spend on luxury items like those I sell on a regular basis. I just can't understand why people this rich would want to steal from an insurance company." The investigator thanked Sandy for her assistance and cooperation and obtained authority from his supervisor to move on with his investigation with vigor. He found similar invoices with a format identical to that used by Sandy, except that the name of the stores was different. One of those invoices was from an antique store whose name was only 2 miles from Sandy's store. Its name was Brook Hollow Antiques. He drove to the location, and the address listed on the invoice was that of a small dry cleaning shop. When he spoke with the dry cleaner, he was informed that Brook Hollow had occupied the space but had moved out 3 years before the interview, which was 2 years before the fire. Libby could not possibly have purchased items to replace those damaged in the earthquake from an antique store that was a dry cleaner at the time of the alleged purchase. Only 3 blocks away from the dry cleaner was the Sleep Tight Mattress Company, where the invoice presented indicated the purchase of a $6,000 brass bed. Although it was on a different form and not in the least bit suspicious looking, Mr. Fair remembered that he was an investigator, and after meeting with Sandy, no longer trusted anything he received from Bill and Libby. Since he was already in the neighborhood, he stopped at Sleep Tight and met with the salesman whose name appeared on the receipt. "Do you remember Libby as a customer?" the investigator asked. "No, sir," the salesman responded. "Do you have an invoice from Sleep Tight showing she was a customer?" "I do. Let me show you invoice number 3167, dated July of 2010. "Well, that's my name and handwriting up there in the box as salesman, but I still don't remember it. Let me pull a copy of the receipt. We seldom sell such expensive brass beds. You would think I would remember." The salesman went off into the office and returned within 5 minutes, and he showed his copy of invoice number 3167 to the investigator. "This is very interesting," the salesman said. "You can see that it's the same invoice number. The name and address are the same, the salesman is me, and yet the description is totally different. What was purchased with our invoice, number 3167, is a small child's brass bed that cost $300, not a king-size $6,000 brass bed. Do you have the original receipt?" "No," he said, she gave me was a photocopy." The salesman, obviously upset, volunteered. "I'm going to make you a copy of our real receipt," he said, and concluded, "It seems that this person is trying to cheat you." The investigator returned to his office and dictated a lengthy report concerning the results of his preliminary investigation. He also prepared, as required by law, a suspected fraudulent claim report for submission to the Fraud Division, California Department of Insurance. His company had already paid Bill and Libby over $850,000. There was no question that Bill and Libby had incurred fire damage. However, it now appeared clear that Bill and Libby were also attempting to defraud their insurer for additional monies to which they were not entitled. Fraud, no matter how small, voids the entire insurance policy. The insurer might be entitled to recover everything they paid to Bill and Libby. The investigator's supervisor was a very careful and cautious man. He knew that the insureds were wealthy insurance professionals. Accusing a wealthy insurance professional of insurance fraud could be very hazardous to an insurer. He instructed his investigator to immediately contact an attorney who specialized in insurance coverage and insurance fraud matters. Fraud retained the services of L.G.L. Eagle, Esquire, to provide the insurer with advice and counsel. He also asked that Eagle, if he agreed with Fair's evaluation, to require that Bill and Libby appear and testify at examination under oath. Adjuster Fair wanted to give Bill and Libby the opportunity to explain the apparently fraudulent invoices identified as a result of his investigation. The file, already 6 inches thick with invoices and estimates of repair costs, were photocopied and delivered to L.G.L. Eagle. Eagle, who appeared to be the twin brother of Gabby Hayes with teeth, was there ready to work. Eagle had served as an independent claims counsel to Secure and Stable for 15 years. His appearance, disheveled and wearing cotton pants, a dress shirt, and tennis shoes, did not fit the image of a high-priced insurance lawyer. His appearance was a ploy he used to put people he interviewed at ease. He was not intimidating. He was as comfortable as an old shoe. Comfortable, perhaps, but with precise, surgical, sharp legal mind, attuned to excise fraud with a vengeance. Eagle, acting as a sole practitioner, had almost no overhead. His fees were reasonable in light of his more than 30 years' experience. Although Secure and Stable required Fair to wear a suit and tie every day, Eagle's skill caused Secure and Stable to ignore his efforts at comfort. After reviewing the voluminous file materials, Eagle informed the insurer that he agreed it would be in the best interest of the insurer and the insured's, Bill and Libby, that they be required to submit to examination under oath. He scheduled the examinations within 2 weeks and began interrogating Bill and Libby. Bill appeared totally ignorant of the claim for contents and contended he delegated that duty to his wife. He was home so seldom he claimed to have no idea whether they had repaired or replaced any item in the house. He was upset only when he found his father-in-law had charged his wife $9,500 to stay in Dad's house for 1 week after the fire. When asked about the bill, he replied, quote, "I'll hit them both upside the head with a 2x4 if that's true. Dad stayed at our house many times, and I've never charged him." Libby testified in copious detail. She contended all of the original receipts had been thrown away because I had no place to put all those little slips of paper. I just photocopied them so that I had an 8.5 by 11-inch piece of papers to put in the notebook to make the adjuster's job easier. Then, since they were taking up the small space we had in the temporary house, I just threw the originals in the trash. Libby Board verified every photocopy of a receipt was prepared by the vendor in the normal course of his business. Each document was a receipt either of a purchase either before the fire or after the fire and accurately represented what Bill and Libby had actually paid at the time the items were purchased. Libby stuck to her guns. Libby had no respect for Eagle. He appeared to her to be an old, ignorant fool who was wasting her time. She believed she could lie to him with impunity and testify that each receipt was valid. She began to complain bitterly that Eagle and Secure and Stable Insurance Company were merely delaying the payment of her claim to gain some perverse pleasure and make money on the float. Eagle assured her such was not his intent. He continued, as if he had no knowledge of the statements of the various vendors who had established that the invoices Libby insisted were accurate were false and fraudulent. He gave her rope and she used it all to cause her own downfall. The last hour of the examination, Eagle showed Libby copies of the real invoices and asked her why they were different than the invoices she had submitted. Her lawyer told her not to answer, advised Eagle that the completion of the examination needed to be taken later after the transcript of this session was transcribed. Eagle, with treacle in his voice, agreed and picked a date some 45 days later. He asked the court reporter to prepare the transcript within 6 days. 6 days later, the transcripts of the examinations under oath were submitted to counsel for Bill and Libby with instructions to have them read, correct, and sign them under oath. They changed the testimony after Libby had opportunity to confer with her lawyer, from absolute denials of wrongdoing and verifications of purchase to "I lied." Over and over again she testified and changed her testimony from "I told the truth, I had the loss" to "I lied." Eagle was surprised by the response. In 30 years of insurance law practice, he had never received a blatant and straightforward confession of insurance fraud. He had proved fraud many times, but never had anyone felt a need to confess. He telephoned Libby's lawyer, I am honest, Esquire. I am. Why did you send me the transcript corrected to admit that your client lied under oath and defrauded her insurer, my client? Well, Eagle, he responded, I felt I had no choice. No choice? What do you mean? The invoice for the bed convinced me she had lied. I sat Bill and Libby down in my office and explained to them the penalties for perjury. I was upset. When I got your first letter, I confronted them and demanded to know whether they had faked any part of their claim as you were accusing. They lied to me. How? They both told me there was nothing to your suggestions. The claim was legitimate, and they, as insurance professionals, felt that Secure and Stable was just trying to get out of a legitimate claim. They told me they had made a great deal in the construction defect suit and tricked Secure and Stable into waiving its right of subrogation, but they did nothing wrong or illegal. What happened when you confronted them? Libby finally broke down and admitted to the fabrication. She said it was just a lark. All her clients cheated the insurance companies, and she wanted to see if she could do it. Did you explain to her, as I did at the examination under oath, what she had done was a crime? Of course I told her. She would most certainly be convicted of felony insurance fraud and perjury as well, but both carry a 5-year penalty, and as any conviction will result in the loss of their license. She was devastated. She thought she had destroyed her family. But why admit the crime? I spoke with a criminal defense attorney friend, Johnny C. Courthouse, and he told me When the evidence is so strong, a conviction is a certainty, he thought, and Bill and Libby and I agreed that the best way to confuse a prosecutor and obtain a light sentence would be to admit everything and give back any money they got that they were not entitled to receive. That way the perjury would not be available and the DA might not even file if he thought the insurance company wasn't hurt. Eagle was almost speechless as he listened, shocked. He said, "I haven't seen any money yet." "Oh, you will." Bill has been going over the list and forcing Libby to tell him which items were lost and which were not. "You should be receiving a check for about $70,000 in the next week." "Well, I am. You should never have been involved with these people." "I make good money off the construction suit. Bill has always been honest with me and everyone else with whom he deals. Why, I remember a suit a few years ago where a deposition proved he had no case. He told me to drop it immediately and paid the defendant because he had made a mistake. This isn't the kind of man who would cheat an insurance company." "He may not be that kind of man, but he and his wife have succeeded in defrauding Secure and Stable for as much as $100,000. "Yes, but Bill didn't know what Libby was doing." "I'm not sure you're right, I am," Eagle responded, "but if you are, he profited from the fraud." "Well, that's why he's giving the money back." "It doesn't matter. The admission of fraud voids the whole contract. Will he give back the entire $850,000 Secure and Stable paid to rebuild the house?" "Well, they don't have that kind of money." "Perhaps they should have thought of that before the crime was committed." "Come on, Eagle, you don't want this mother of four to go to jail, do you?" Eagle thought about the question for 20 seconds and then replied, "Yes, I do." "Then, Eagle, we have nothing more to talk about." The money arrived 2 days later. Secure and Stable held the check because it did not have any coding to allow it to take in money from a fraud. It was also concerned that if it took the money, it would be forgiving the fraud. Eagle reviewed the items for which Bill and Libby returned the money in detail. He found that some items he knew were fraudulent were not admitted to being fraudulent, while some items he thought were legitimate were admitted to be false. He advised Secure and Stable to cash the check since the fraud had not been cured. Libby continued to lie to herself and her husband in an attempt to reduce her wrongdoing. He recommended that the entire claim be denied, that the policy be declared void for fraud, and that the full amount paid on the void policy be demanded. If payment was not made instantly, he further recommended that Secure and Stable file a suit in U.S. District Court under the Racketeer Influenced and Corrupt Organizations Act, RICO, demanding 3 times the amount paid as punishment. Secure and Stable could not allow insurance professionals who attempted to defraud their own insurer to profit from a crime against their profession. Secure and Stable sued. The file was turned over to the Fraud Division of the California Department of Insurance, and a district attorney filed felony insurance fraud charges against Libby. She eventually entered into a plea bargain where she only served 60 days in jail, and Bill filed for divorce. Secure and Stable is actively pursuing the lawsuit, occasionally with a good investigation and excellent legal work. Justice for an insurer can be done. Regardless of the outcome of the suit, Bill and Libby's family has been destroyed. They are now known in the insurance company as frauds and criminals. A business built on the idea of ubere fide, utmost good faith, will not do business with people who have proven they cannot be trusted. This video was adapted from my book Insurance Fraud Cost Everyone, which is available as both a Kindle book and a paperback from Amazon.com. Thank you for your attention.